Hey everyone, welcome to Talking Tokens, a podcast focused on interviewing the best crypto founders, market players, and up-and-coming startups that are changing the industry every single Tuesday and Thursday. I'm Jacqueline Melinek, your award-nominated host and former senior crypto reporter turned entrepreneur, and I'm excited to be here with you all. Now, let's get into it. Today's guest is Yat Siu, the co-founder and chairman of Animoca Brands. If you don't already know, Animoca is a pretty big powerhouse in the Web3 world. They have invested in over 450 companies, and they have launched products and partnerships with a broad portfolio of companies, including The Walking Dead, Power Rangers, and Formula E to build products. I'm excited to have Yat on the show. We've talked in the past, but Yat, welcome to the show.
Thanks for having me. And just a quick correction, we're now at 540 portfolio companies.
Oh my God.
Other than that, thank you for the introduction, and it's a great pleasure to be here. I guess it shows how long it's been since I've been on your show.
Yeah, wow. Well, you guys are moving fast. And as I mentioned, we've talked in the past. I've interviewed you for a number of stories. I've written a bunch of stories that have included Animoca in all those investment rounds. Not all of them. I haven't written every single story. But how did you get into the Web3 space, and why did you start Animoca?
Well, so I really got into this space through CryptoKitties, as I had shared earlier, probably in one of your shows as well. We were in sort of owners of a studio called Fuel Powered that was based in Vancouver, and they shared an office actually, with what was then, Axiom Zen, which basically sort of spun out this other entity that we now know as Dapper Labs, the NBA Top Shops, CryptoKitties fame. So We saw what happened there with ERC 721 back in 2017. And we decided, actually, that is where we think the future is, coming from a gaming lens. I mean, Animoca was and still is a gaming company at heart. And we saw that we could now truly have true digital property rights as an ownership in our sort of gaming goods. That's how we sort of initiated ourselves in the market. But, we decided also that when we studied with sort of what was back then really blockchain, we didn't call it Web3 back then, that the networks were permissionless. And that was actually the way how open source also worked when it came to code. It was permissionless. So how do you have sort of an influence in a network that you can't actually have a monopoly over, which is, the Web2 model is we monopolize everything. But in Web3, actually, there wasn't really a way to do that. I mean, who owns Ethereum, for instance, or who owns Bitcoin? And, can you stop, basically, users from Ethereum to, pop over to Solana, for instance? You can't, right? And that's the beauty of the permissionless nature of that. So we felt that actually the way to play in this space best, which sort of fit our ethos, was to broadly invest in it as an ecosystem, essentially as an economy, rather than trying to pick one or two winners. And the second thing is because we're builders and, we were newcomers to the space, right? We didn't start from the sort of early Bitcoin days. We came in relative terms fairly late. So through investing, we also created education for ourselves, right? And what we did also was, because we believe so heavily in NFTs and really in digital culture, as it were, we were early in companies like, OpenSea and Axie Infinity and Sandbox, Decentraland, that's sort of that wave. But then, of course, afterwards, also companies like Magic Eden, and Yuga Labs and a whole range of these companies that we basically invested and supported, or in some cases acquired. And then that's how it started. And as the ecosystem grew, and as we saw what happened in communities like in the Philippines, or in other parts of Asia, what it did for financial inclusion, not only did our conviction grow, but also the thesis changed as well in terms of how we thought that could really sort of change the world in incredibly meaningful and impactful ways. So that's kind of, sort of, we were really all in on Web3 and why we're in the space.
Mm-hmm. You're also very passionate about intellectual property and digital property rights. I've heard you talk about it in the past. We've talked about it. But for our new listeners here, can you kind of tell me what brought this on and how do you think that plays into the broader Web3 economy?
Well, I mean, I think today everyone knows the definition of Web3 in some form of value and some form of way. Some of them call it, the internet of value, but I think nowadays most people describe it as the internet of ownership. I think that's really sort of key. And what is ownership? It's property rights. And when you own property in whatever it is, whether it's something physical or in this case, something virtual, it allows you to invest in it in the long term. It allows for essentially this thing called capitalism to actually function, because now it's something you own, and then you have the freedom to transact and do with with whomever you will. So it's effectively an expression of freedom freedom of assets you could own and that you can then trade and pass on to others or do things with them. For instance, if you own your property in the real world, you could make a restaurant out of it, or you could make a shop out of it, or you could rent it to someone. It's your right to do so. And really, in the physical sense, the role of government was really meant to sort of just be used to sort of ensure to protect these rights. So that's kind of that's one sort of major thing that property rights gives you. And we couldn't have that in a digital world before. Right. In the digital world, everything was owned by the platform, whether it was Apple or Google or Facebook. Right? And when you think about sort of every time you post something on Instagram and you're bringing in followers and you're getting attention and you're creating networks and you're creating value, that's digital property, but it doesn't belong to you. And so they're farming this attention and this value, but really you're enhancing someone else's property. You're basically renting. And then these properties, this digital property that you've made more valuable, like an Instagram, they come back to you and they say, by the way, thank you for your service. I'm going to increase the rent on you, right? And of course, the increase of rent is, in this case, the form of advertising. You want your attention? You want to, like this, just think of this idea of, retargeting your own customers. I mean, how ridiculous is that? You brought in the customers to the platform, but if you want to market to them, they'll charge you a fee, right? It's just like, wait a second, that's my customer. Why should I pay this type of fee to do that? Because it's actually not your customer anymore, right? But in the physical world, we wouldn't allow that. But in the digital world, we happily gave it away because we didn't really understand its value. And so, and the other way to look at it is, from an intellectual property standpoint, which is kind of virtual property right as well. Imagine what the music industry would be like if we didn't have intellectual property rights protection. There would be no Taylor Swift. You wouldn't have Michael Jackson. You wouldn't have the Beatles collection. None of that stuff would be possible. Right? But it was really only possible to sort of encapsulate these kind of virtual intellectual property rights in things that made a lot of money, because the legal infrastructure and so on basically required sort of the cost of a lawyer and conveyancing and so on to do that, which meant that unless you was making at least hundreds of thousands of dollars a year, it wasn't really worth doing, which is why you don't have property rights protection for, your pencil, right? Or pieces of paper or scribbles.
Yeah, like nominal things. Yeah.
Nominal things, right? But, with NFTs and with blockchain, you can actually do intellectual property protection, virtual property protection, as it were, for basically anything you want. And so ranging all the way from, digital artwork, which is we see with NFTs, to gaming items, even to things like dance moves, educational content, that's all now possible because you can essentially enshrine digital property rights, this intellectual property protection, for less than $1. And when you think about what's happened to any industry where you can actually protect and prove property rights, capital value can start to form. And this value formation then allows you to sort of give the value of something that can be looked at from a moving forward perspective. And also you can invest in it. So if I know that this is my property, whether it's a dance move or it's educational content or music, then I can invest in that because I know that it's mine and I can make it better and I can tune it up and maybe sell it for more or bring more enjoyment because I'm protected from it. But if it's something I don't own, just like in the real world, if you don't own it, you won't take care of it. You also can't invest in it because it doesn't belong to you, right? And so I think this is the other thing, outside of the fact that, of course, it's the foundation of capitalism. When you have property rights on anything, including digital, right, then you have the ability to think about long-term investment. And we know that for any economy and any ecosystem to truly flourish, you need to be able to invest, with a long-term horizon. And if you only invest on the basis of what I can make in the next 3 months, well, then you have generally a sort of a pretty bad ecosystem. Whereas if you're investing, it's like venture capital. If I can invest in something, I can take a 10-year horizon, 20-year horizon on it. That's a very different perspective than thinking, okay, sort of, I would invest in something that, I look to see what the gains might be for the next month or two. That means everything is really a trading mentality as opposed to a sort of a long-term investment perspective. So these are all the reasons why property rights are important. And digital property rights, I think of as an unlocking. So in other words, that, because we don't have digital property rights today, for most people in the world, there's a lot of value that has not been unlocked yet. Now imagine what happens when every digital citizen in the world, effectively, like 5-6 billion people in the world, now could own what they do digitally in one form or the other, the value unlock of their sort of virtual time wouldn't just be 10 or 20%. It would be 10, 20, 30, maybe 50, in some cases 100x in terms of its potential than what it is right now, just as it's done in the physical.
What do you think the timeline is for that actual unlock? And do you think these big tech and social media platforms really want this? I would argue they don't, but how do we get them on board?
Yeah. So first of
course
all,
they don't. Yeah,
of course they don't. I mean, it's which king wants to sort of give up his kingdom, right? And at the root of this isn't necessarily the money per se. It's really about the concentration of power,
right? The control,
and the control. And money is a proxy of power. But what's interesting is that the more money you have in a larger economy, even though the value of that money might get more distributed to people broadly, and the, let's call it, aggregate power of that economy, let's say as a country or as a GDP, is bigger, the ones who used to control that power is actually in proportion smaller, but their net holding might be bigger. So, if you look at, for instance, the royal family in the United Kingdom, if they were actually a dictatorial sort of, structure in the way that perhaps they were once before, and, the king would rule completely, I don't think England's economy, the United Kingdom's economy, would be anything the size that it is today. However, the king would still retain more control. And then today we see that example, right? In North Korea, which is one of my favorite examples, you have essentially a despot who controls the country top to bottom, but its economic effects are near zero. Whereas when you go to a place like Switzerland, which is significantly smaller by population, probably 10 times smaller, right? But it has so much more economic potential because you have essentially property rights and capitalism and the freedom to transact and all these things to basically build and construct these sort of, economical network effects, as it were, on top, right? So the time horizon that I think we can see here, I think, in the next, 3 to 5 years, we'll see a significant growth in this area already, which we're seeing today. I mean, in gaming, for instance, in Web3 gaming, we don't have nearly as many users as you have in Web2, clearly, right? The actual truly active players in the space is probably, in the millions. But we're actually driving billions of dollars of value with these millions of users, right? Which in the Web2 world, which essentially doesn't have property rights, to get to those same numbers, you need literally 20 or 30x those users. Right? So that's a sort of an example of that illustration. And today, we are roughly at a $2.2 trillion, I guess, combined market cap for, I guess, the world of Web3, as it were, with the market caps of Ethereum, Bitcoin, and so on combined. But how many people are actually truly in Web3? It's tens of millions of users, really, right? But they encapsulate a value far greater than these other closed networks. When you take a look at like a Facebook, or when you take a look at, an Apple, I mean, they reach hundreds of millions of users, and yet their combined market cap is in some cases even smaller than that, right? So that, I think, is probably an example of sort of what happens when you have one ecosystem that has property rights and another that does not.
Where do you think the best or only place for the future of people retaining and owning their IP and property rights will be? Is it the metaverse, or will there be other kind of platforms where this can exist?
Well, first of all, I think, everything that you do creatively, which, basically is I think what humans are generally naturally more sort of attuned to do, becomes a way in which you can protect that. So it doesn't mean necessarily that it has to be purely virtual, like in a gaming item. That seems very natural because gamers already have a relationship with their sort of, virtual experiences. It's one of ownership, right? You talk to a gamer, he thinks he owns his skins. He's already used to this idea of a virtual currency of some sort, right? So the sort of, movement from I have a virtual currency in one game and then it could be a token doesn't seem completely alien, for example. So that seems like a natural transition point. But really, the benefit of the space is that everything essentially will now have a form of digital property rights, because property in even the physical sense, when we go to the next level, isn't just about how you monetize it. It's actually about your identity. Things that you own in the physical world that you can have speak to who you are, whether it's clothes, the places you live, the car you buy. It's I love to give the example that, people don't buy Birkin bags to put stuff in it. And they also don't buy a Rolex watch to tell the time. Right? But these are their actual pieces of property that actually speak to who they are. And when you look at the kind of capital that humans generally seek for, right? Right now, we're paying a lot of attention, particularly in Web3, just because of tokens and so on economic capital. So we look at the foundation of value and we say, okay, this is how much, let's call it economic value it derives. But then what's interesting in any economy, once you have a certain amount of economic capital, you try to distinguish yourself from other people that also have economic capital. And then you go into things like cultural and symbolic and social capital. And these are the things that are more enduring. And that's kind of where things like NFTs or other things start to come into play as part of that sort of economic structure. And they help grow these economies. And where the growth then comes is that, imagine what the physical world would be like if we actually didn't buy anything of culture. Right? If everything was just utility and economic, right? And we would trade everything we do.
Very bland.
First of all, it would be very bland. There would be no retention, no stickiness. And those economies would generally be very poor, right? I mean, and that's kind of the issue. Purely utilitarian societies, or at least in its construction, actually don't have big GDPs, right? But the ones that do are the ones that have a big investment in its cultural capital assets. And you see this like in America, right? How many people are actually employed in sort of creating value, sort of cultural type of assets. I would argue everyone in retail that's selling fashion or clothes, for instance, would be part of that, not just people in the movie or music industry.
What can people do today to kind of get ahead of this and really start to own their digital property rights, whether they're in Web3 or they're not?
Well, I mean, I think the very first thing is I think it comes from a form of education first for people to actually appreciate that their virtual time, their digital time is actually valuable. I think a lot of people don't understand that, right? And I often sort of, give this sort of metaphor of imagine if you had sort of oil in your backyard.
I'd be rich.
You'd be rich, but actually maybe 400 years ago, you didn't know what that oil was worth. Someone would just extract it from you. You'd be like, just take it away. It's fine.
Right.
That's kind of how you're doing today online. Yeah. And so the very first part, I think that we need to sort of appreciate is that our online time is actually valuable. And, but we don't know that because if you use Instagram doesn't give us statistics that says, thank you for making us $1,000. Here's nothing. Okay. I mean, that's basically what's happening, right? So there's that part. So I think people need to appreciate that first, because if they don't appreciate that, they're still willingly give it away. Because the other part that these social platforms are farming really well is social status, right? So they skipped the whole economic side and basically just said, I'm trading social status. I would argue that likes and follows are actually currencies, right? They are effectively a kind of, let's call it, private tokenization of the platform. They created incentives. If I have 1 million followers, I have a status and a value that's more than the person who has 10,000 followers, right? So they've created that, except that they're not really mine, right? You could say it's a game and it's virtual, but in reality, it's really just a trick to basically sort of, make you do what you do to the benefit of the platform. So we need to understand that first, that your time online is valuable. Because then when people say my time online is valuable and, I ought to be paid for what I do, and since I can't be, I'm not getting, shares from, I don't know, Apple or Facebook or Google for my contributions, what can I do? That I think is the first part where people say, wait, I need to find a way to do that. I think, and that's what's happened in Web3, right? The people in Web3, and people who got into Bitcoin or into Ethereum or in sort of, blockchain generally, those are people who kind of sort of realized that the current paradigms that they sit in are actually bad paradigms, and they understood that they had to step out. And I think we need to do more of that. So I think education, things like you're doing here in this podcast, for instance, and all that type of stuff, I think is very important. I think just, I know people have tried a lot to sort of, engage people, with making it easy to onboard with wallets and so on. And while that's helpful, we've seen, for instance, that hasn't really been as effective because people get a wallet and say, okay, what do I do now? I don't, it doesn't matter because I still don't understand it. But there are things that are changing this on mass scale, because there's one other thing that's happening also, which is that, as you may know, both Apple and the big platforms like Steam and gaming have all really created heavy restrictions, in some cases outright bans, for instance, for things like, tokenization or NFTs in games. Like at Steam, for instance, I think it's still not allowed. And for Apple, they created these incredible restrictions like, yeah, you can show your NFT, but it can't have any utility. Well, that's kind of useless for a Web3 game. Yeah. So what's the point in all that, right? But then there's, platforms like Telegram that have now come up with the Ton blockchain. And even though, Telegram isn't popular in the US, it still has over 900 million users in other parts of the world. And so they've opened up the platforms. And so now we think platforms, we're quite heavily invested in the Ton ecosystem, have launched a number of projects there. And so for things like gaming, for instance, we're seeing 3 million daily active users right now because of Telegram and Ton. And then we think those users are going to start moving into the rest of Web3. So the distribution platforms are needed first, right? Just think about what the App Store and what Facebook in the early days actually did for content and for application distribution, right? They actually completely sort of, in some ways, liberalized it but because they controlled the market, when it became big enough, then they created rules and restrictions. But in Web3, you can't really do that. So I would say that's why I think, it's going to happen sooner than we think, because big platforms are actually, like Telegram, are opening that up. And I think it will force the Apples and the Googles and the Facebook to start to adopt and support it, because they will end up losing market share, right? So I think the competitive forces will ultimately sort of bring some equilibrium. But and it's already happening.
Mm-hmm. Yeah, no, I agree with you on that. I know you wrote a blog post about a year ago, and then you wrote one this most recent July, which we'll get to after. But the one from a year ago, it talks about how important culture and ownership in the metaverse is. And I feel like that ties into a lot of what we've been talking about thus far.
Absolutely.
In the past year, what has really changed and evolved on that front? Do you feel like there has been significant progress since then, or we're still in the same position that blog post was?
So I think the nature of what I wrote in the blog post was really to encourage people to think that culture is the deepest TVL of any economy. Right? So, I'm in terms of, I guess for non-crypto people, meaning total value locked, right? And what I mean by that is essentially what we invest in an economy. Right? So if you take away whatever we spend, in culture in, let's say, America, we're talking about the evaporation of trillions of dollars of value, right? There would only be one kind of car, because it only would be black, like the Ford Model T, maybe just newer looking. And it would have only one function, to take you from point A to point B. And, you wouldn't be sort of, like if you just take a look at your own wardrobe, or my wardrobe, right?
We're matching today. Yeah.
Yeah, well, yes, we are. But
both wearing black. But
exactly.
But I know what you mean. Yes. One thing, very the same.
Yes. All the same. But instead, when we open our wardrobes, we have a diversity of things, different colors, different things, short and long and beautiful, this occasion for this and whatever. Everything we purchase is cultural in nature, because cultural capital is what we as humans are intrinsically sort of motivated to do, right? And I don't mean just showing status. It's about individuality. Like, what's the one thing that, certainly in America, that is celebrated above all, right? Which is your individuality, right? And how do you express your individuality is in the forms of culture that you represent. So that's what this means, right? And what I was trying to tell people, because a lot of people, especially when they're not in Web3, or even in Web3, they were still too focused on the utility in an industrial way almost, right? As in, what's the application? But sometimes forgetting that culture is the application in and of itself, right? Social is the application in and of itself as well. Like, just to be together and enjoy a good meal, being in a certain restaurant is actually a cultural connection that we have, right? And we spend for those reasons. So that's what I was trying to sort of express at the time. And I think we haven't really moved significantly from that, because remember, when I wrote that article, we were still, emerging from, the FTX induced winter. And the market obviously is much better today. And therefore it's just kind of evolving out. And we can see, whether this is with Pudgy or whether this is Mochaverse or, with Solana projects like Mad Labs and so on, that you see certain forms of expression of culture. But there's another narrative in the expression of culture that has taken shape that didn't exist when I wrote that article, and that's meme coins. Meme coins have existed before, but they have really sort of become a bigger part of, let's call it, the first stage of the expression of Web3 culture, that NFTs had before. But with NFTs, because they're non-fungible, the identity is deeper, but the network effects form harder because of the fact they're non-fungible. But when they do, they're very deep. Whereas in fungible tokens, they can actually spread much faster because actually the rules are simpler, right? In terms of, owning a token that could be something funny, something political, something weird.
Do you have
right?
meme coins?
Yes, meme coins. I mean, and we're not issuers of meme coins ourselves, and we don't endorse them, but we do recognize them as cultural context, which are really expressions of their time. Yeah. And a lot of that is counterculture, and a lot of that also is our expressions of the fact that we have a deep sort of level of inequity in the world today.
Mm-hmm. Yeah, I mean, I have some meme coins myself, and I just see it online. The communities are extremely strong, whether or not that's just to like elevate the price of the token that they're all financially invested in, who knows? But I also think there's a little bit of community here and there with them. Speaking,
and some of them grow quite strong. And just quickly on this one, and I think this is true for economies as well. I mean, I look at this very similar from the lens of, I guess, immigration as well. You might come for the money, but you stay for the culture. Right. There's a big amount
member. Yeah.
Yeah. You become a community member. And this is from my own sort of historical perspective of, being an immigrant, having grown up in Europe. But really, we only made it all the way out to Europe because, we couldn't make it to the one place that most people wanted to go. This was in the 80s or 70s and 80s, which is America. Right. So, America was the place, but was actually, if you think about it, America is a kind of meme. Right, its meme expression is freedom and liberty and capitalism and hope and all that stuff was the expression of America, and you wanted to go there. And when you became a member, yes, you went there because of better prosperity or at least opportunity for prosperity. But actually, you were proud to be an American, and you ended up sort of becoming a member of that community, and then you were celebrated by members of that community that you were now American. Right, and so now take that, whether this is in fungible tokens like meme coins or NFTs. And you actually see expressions of that in the same way, just amplified more quickly. So I think that's really fascinating.
Meme coins are within the realm of cryptocurrencies, tokens, coins, whatever we want to call it, right? But I see, even for tokens with proper utility, that there are very big communities often behind them. What kind of role do you see tokens playing in the broader ecosystem, especially today, now that we have meme coins? There's some mainstream popularity here. Why do you think they're so important, even when others sometimes don't feel that way? This podcast is sponsored by Galaxy. If you're immersed in the world of Web3, Galaxy is a name you need to know. As a decentralized super app with an impressive 21 million users boasting over 100 million monthly transactions, Galaxy is elevating its impact with Gravity, the magnet chain for Web3. Gravity is designed for full chain abstraction, zero knowledge proof-based privacy, and rapid transaction speeds, all coming together to offer an unparalleled user experience. Gravity opens the door for developers to effortlessly build on the largest on-chain distribution platform, and for users, it promises an even smoother, more secure journey through Web3. It's not about being on-chain, it's about being on the right chain every single time. Galaxy is on a mission to onboard the world to Web3, and Gravity is the magnetic force that will propel the vision forward. Ready to launch your Web3 journey? Build the future on Gravity. Visit gravity.xyz for more information.
So, I think, first of all, I think the reason why a lot of people are sensitive around tokens in and of itself is because of the fact that they have financial utility embedded in them just because it's a blockchain. And there's a kind of velocity of value that can form sometimes. It feels threatening and more dangerous. On one hand, because we have generally a low rate of financial literacy across the world for the time being, which I think, part of Web3's big missions, I think, is to broadly expand financial literacy. I think that's really important and a part of the opportunity. But I think the other thing also is that today, because of what's happened in the last 20, 30 years, we have an uneasy relationship with money in and of itself, right? So, the capitalists in the room are all celebrating it, but everyone else was excluded from capitalism in a sense, right? Because they're broadly in the labor economy, or maybe they're more socialist thinking, or they don't understand money. actually they fear it almost because they don't get it, even though, they might like to have it, but it seems odd, or, so, in America, when I first went to the States, decades ago, right? People who made money were broadly heroes, right? They were like, hey, you
the
did
American
well,
dream, yeah.
The American dream, all of it,
Mm-hmm.
right? Today, it doesn't feel that way in many places in America. It's like if you have money and you've made a lot, maybe very quickly, you're looked at with some kind of suspicion, which is basically how all of Europe was looking at people with money, for decades before. So
Europe
I've
was
seen
ahead
this
of the
pattern,
trend, yeah.
right? Yeah, Europe was ahead of the trend. But it comes a little bit from the sense of, money is a little bit dirty maybe and whatever. And again, because we don't teach it at school and we don't understand, even though it's such an important fabric of our society. Because, I think, for instance, of money in general as probably the biggest social network in the world. Right? Because it's because of money that we can transact with each other, with strangers around the world. And we can, when we think about trade, right? Actually, what is trade? Trade is forging relationships, which is forging social connections, across boundaries, across countries, across cities, for instance, right? So that's actually what really, is a really powerful effect of what money can do and what money is, I think, in many ways. And so tokens actually express that, right? So money is a network. And tokens are networks as well. And so we like to, and this is something that we wrote about recently, we like to think of tokens really as expressions of network effects, right? So when you look at it purely from a value standpoint, you wouldn't look at, you're not buying Ethereum because it gives you an awesome yield. I mean, ironically,
especially not.
You could take your money and better yield than T-bills, right? As an example.
Exactly.
Right? So it's not, but why would you want to have these tokens? Actually, it's a form of membership. It's to be part of the network effect, right? And before Web3, we really didn't have a way in which we could own network effects, right? We could own these constructs of sort of the value that network effects create. So, for instance, if I own shares in Meta, which formerly was Facebook, I'm basically owning a piece of a company that is harvesting its network effects, right? Of Instagram and Facebook and WhatsApp and whatever they have. But you don't have a way of actually owning a piece of the network. That is now possible in Web3. So every token is a network effect, which is really just another way to say it's a social community. And when you look at, for instance, a platform like sort of Reddit, right? I mean, Reddit is a network, but it's actually a network of networks, right? You've got a community that's forming and that grows even bigger. And some of the communities might be really large and some of them are small. Actually, each of these are potential token communities. Nobody said that a token community had to be valuable. That's an expression of some people. What I think of a token community is really just a network that's formed. And through that, you have authentic connections by saying, if I own this NFT or if I own this token, I'm an authentic member of that network and I can scale that across, right? It's not some random stranger that goes online. It's a form of online reputation, even if it's sort of the first stage, right? So these are network effects. So I think the proliferation of tokens as network effects and having a way of owning these because you want to own these is actually, I think, one of the most important, utilities, but we don't express it as that. It's more intrinsic, right? We buy a token, we say we're part of the community, but what we really mean is we become a member of the network and contribute to the network effect and also get to participate in the benefits of these network effects.
Mm-hmm. Do you think all communities really need a token though, or something that bounds them like that to keep them together? Because you brought up Reddit, right? And Reddit launched a few Web3 initiatives, but there's no token for Reddit. I guess maybe a stock would make sense in this instance, but stocks don't really bring people together, in my opinion, the way that
they don't.
Tokens or crypto does in general.
Right. Yes.
Yeah.
Right. And I think what you'll end up happening, which is already, if you look at, for instance, Discord, I think, really Discord has been a proxy for helping form network effects for these token communities, right? And so I expect Reddit to do the same. Whether Reddit becomes a platform that wants to eventually launch a token, I don't know. But either way, people are using it to basically gate communities in them to say that you're authentic. One of the biggest problems we have actually in Web3, I say in the web, not even Web3, just generally the web, is sort of how do I know that you're an authentic member of my community? Do you have a passport of sorts that proves that you are a real member? And that's what actually tokens solve, which, in many ways, we farmed that sort of, we've delegated that sort of control to the platform, but the platform has a reason, both commercially, but maybe also by law, but for certain sort of, privacy reasons, not to disclose who this person is, and so you can. And so how do you actually prove authentic actions in a zero knowledge way? And actually blockchain is perfect, right? And I think the other thing that we've seen, what the internet has shown, is that there are millions and millions of communities that form together. And so millions and millions of them need a way to basically create communities with these concepts of zero knowledge authentication effectively, without sort of infringing on someone's privacy, for example. So I think tokens are a perfect way to do that. And with things like Mochaverse, with Mocha ID, one of our sort of goals was to help build a reputation layer where you can start layering your reputations across all of these multiple token ecosystems into one sort of framework, so that it's easier basically for you to be effectively sort of get opportunities from, right? It's a little bit like when you think of, a university degree, right? The reason you don't sort of change your physical identity every few years is because you'd have to start everything from scratch. Your reputation that you've built over the last 10 years would have to sort of go away. I mean, imagine, if you changed your name and your identity all the time, right? Then, you'd have to start building your following from scratch and your reputation and, all the time, which is kind of where we are right now in Web3, right? Everyone just opens up a new wallet and starts from fresh, which is actually not good for the ecosystem. And that's why you need reputation systems. And again, both a combination of tokens and sort of, soulbound NFTs and ID systems are all sort of there to help solve that.
I feel like there's a lot of positives to what we've just talked about with like network effects and tokens, but what are the negatives to them? Because obviously there's two sides to every coin.
I mean, there's always right. So first of all, I think the biggest negative right now is I think there is still widespread ignorance in terms of what is the power of of networks that have financial sort of potential embedded in them. Right. So in other words, it's like if you're trading with someone on one hand who has just basically more knowledge than you, right? Then you're actually not creating a level playing field of some sort. So that's kind of one of the issues. And that's actually, I think, what's happened over the last few years that scared people, because it feels like, okay, this guy's saying I should buy this token, I should join this community, but then I go in and I find out actually, it's not a real community, for instance. So, all these type of things that happen. And the scams of the past have given sort of Web3 a bad name, and that's part, and it has a large part to do with the fact that unfortunately you have bad actors. So I think these bad actors need to be stopped. But how to stop them, again, I think comes down to building these reputation systems that haven't really been built up until recently, right? So how do I know that I can trust you? That's something that you build over time. So for instance, on the extreme side, everyone can trust Vitalik because he has a history, but it's not just a history that who is in person. You have his wallet, his background, his identity virtually to show, and you can also see his track record in terms of what he's doing with his tokens, and therefore you build a reputation from that, right? Like it's your actions in life, sort of even if I don't know who you are, become essentially sort of the barometer of trust I give you. It's your reputation, exactly, right? So you kind of need that, and that's not sort of broadly available to most people out there, unfortunately. So there's that. I think the other thing also is that when you're joining networks, in the past, people were driven a lot by sort of, I guess, a little bit of FOMO, right? In terms of, hey, I need to join this quickly, without actually sort of thinking about it. So they're not spending enough time doing the due diligence, as it were. And I often tell people, I want to buy tokens, I want to buy NFTs, what should I do? I said, well, think of it like buying a car. I'm not saying that you spend the same amount as a car, right? But think of it like buying a car. Like you don't just go into a store and buy a car, just, hey, I like that.
You do your research, yeah.
You do your research, you do the work, and you don't look at the car necessarily as an investment. You look at the car as something you'd use, why you want to be part of that. When you take that lens, right? Most people, yes, there's a cultural context why you buy the car, but most people don't buy the car because they think they'll sell it for profit. They buy a car because there's a utility for it. And if you address it from that lens, then you are, you will learn more from that process, right? That's kind of what I tell people often do. And I think we need people to be a bit more patient and spend more time on that type of stuff, right? And by the way, that's why I think Web3 gaming is so exciting, because in Web3 gaming, in any kind of game, really, just think about how children learn so much during the tutorials and during the gameplay about whatever ecosystem they're learning about through the same storytelling techniques. I think we can also teach people about, financial literacy or just Web3 or all these things, right? So to me, I think of blockchain gaming really as one of the biggest onboarders, not just because people love to play games, but they'll actually get educated in that. And I think Philippines has been an interesting example of that. Despite whatever you read about what happened with Axie and Pixels, which is actually made a pretty decent comeback. The people who have entered the space because of them are now broadly doing stuff in DeFi, for instance, right? And they're maybe with sort of remitting money, now basically using Web3 technology as opposed to using expensive platforms like Western Union, for instance. So stuff like that is happening, and because it's opened it up. And these are people who would never even have a bank account because they would only make dollars, or maybe tens of dollars a month. And now actually they have a way in which they can participate in the financial ecosystem, and they were brought in through Web3, right? So I think those are the pros, but they're definitely I think it's a lack of broad knowledge in the space that I think provides the biggest risk. And early days of the internet, if you remember Nigerian 419 scams, you get an email from some sort of African sort of supposed prince who has a lot of money that he needs to send because someone died.
Yes.
All this stuff. I mean, that's what happened 20 years ago, right? And now we have ways to, people generally don't fall for that anymore, but hasn't gone away.
Mm-hmm.
We're kind of at that phase, right?
Mm-hmm. Yeah, but this isn't Nigerian prince asking me for money conversation, right?
No, it isn't.
Web3 is very different from that. I want to make sure people know we're not comparing the two like that. Yeah.
No, we're not. But it's still scams, right? And it's just a different type of scam, and people are now accustomed to it, which at the time they weren't, right? Mm-hmm. And we need more education around that.
Right. No, I agree with you on that. How do you kind of see tokens bringing more value long term? Let's say near term and long term. We've talked a lot about this. I know Mochaverse, which I want to talk about before we wrap things up. Mochaverse has their own token. It seems to be doing well. Where do you see them going in the near term and long term?
Okay, so going back to sort of what I had said earlier, tokens to us are expressions of network effects. And network effects are multifaceted, right? So they're not purely financial, nor are they purely utility. They're a combination of everything. Mm-hmm. And what I find so fascinating about tokens is that the whole sort of demand and supply side that are a combination of its financial and sort of utility side of things can be seen and expressed very, very rapidly, essentially like a market, right? And so for the first time, you have really a kind of network effects market of sorts where you can sort of see and measure that. And of course, if your audience is primarily financial, then maybe you'll see a lot of volume of trading, but you'll see also a lot of speculation. And you see that in some cases, like with meme coins, where, some of them hold them on for, cultural context, but many of them are just trading them for gains. But they're still representation of the network. Mm-hmm. If you want to participate in a network that is like that is speculative, for instance, go ahead, as long as you know what you're getting into, whether it's for fun or whatever other reasons you might think of. But it's a network and it's a representation of this network, right? So again, I would say tokens express these, right? And if you are able to understand what is the network effect that they're trying to build, then you can find also the parameters in which you think the growth of this is. So for instance, in Ethereum, you're not going to be looking at purely of number of holders or how many people have wallets. You're going to look at, for instance, how many developers are building on Ethereum, because that's another form of expression of network effects because they amplify them, right? You want to see what is the strength of these nodes. That's why a lot of people, for instance, look at TVL, right? But of course, even TVL is being gamed, right? Because when people sort of start giving rewards for that, you create sort of network signals that may not be entirely true, right, for the long term, because they're providing short-term incentives to do so. But these are still relevant signals. So for instance, the TVL that's built on Ethereum is probably very, very long term because, fundamentally, there are reasons to do that and there's benefits towards these effects that are being built. So looking at the network effects and measuring these network effects is a new way of how people used to look at, in the stock market, for instance, things like, PE ratios, right? But very few people look at, for instance, network effects from a cultural context. But when you think about some of the most powerful companies in the world, I mean, I think the Arnault family is probably, if not the wealthiest, top 3 wealthiest family in the world, right? What do they sell? Basically, entirely cultural capital. They're selling essentially, network effects of a certain type, and that to me basically is what tokens express. And so when you think about how you build, how you can sort of look at value, look at the network effects in question. You have short-term network effects, which I think, again, are represented in the movement, right? A short-term network effect is maybe a rapid movement going up and a rapid movement going down. And again, if you can see that and understand that, then you'll know whether this is a long-term or short-term project, right? Versus something that maybe is trying to build long-term effects, right? And so with when you look at Mocaverse, again, we have to communicate this. But I think one of the reasons why, the token has done reasonably well is because people in the Mocaverse, and I'll get to such of maybe some thoughts around how to launch projects, are better educated as to what Mocaverse is all about, right? And I think if you look at the evolution of token launches, many of them might enter just for speculation and hoping for a fast gain. It's natural, I guess.
Of course, yeah.
But those users are not there for the long term. They might not be educated. They might not even care. Right? They're just like, hey, I heard this brand. This looks cool. Hey, this is another cat. Hey, this cat is cute. Whatever it is, right? People are doing things where they make assumptions and essentially speculate. But if they actually have a appreciation and understanding of what you're building and the network effects, then they have a way of which they can measure and understand it. Then they actually they can look at the long-term network effects that we built and then see the potential or not of that, right? And if you may recall, when we built the Mocha community, we started with our NFTs. And the NFTs were essentially dropped basically for free to members who were already participating in the Animoca network earlier. Whether you're a portfolio company, whether you were someone building in our ecosystem, whether you held tokens, right? That you were able to essentially earn them effectively for nominal cost, which meant that we were really giving tokens to people who knew us already. And so I think this is the part of it. So when the token launched, they were receiving an airdrop, which they would use for the network. But 76 and maybe now it's over 80% of our community staked the tokens for long-term benefit because they want to continue to participate in the network effects of the Mocaverse because Animoca Brands is supporting that. And so they get it. But if someone who doesn't know that is just looking at a token to, let's say, speculate, they won't understand the utility of those network effects. Then, and maybe they don't even care, right? Which is often what happens, by the way, with launches, right? A lot of people want to trade a token. They do momentum plays, they do technical plays, whatever that is. And then they come in or come out because of that. That's a different audience. And I think that one of the measures, at least for projects like Mocaverse, is to make sure that the majority of your audience isn't that type of community, right? Because when you're in a bull market, it's fine. But when you're in a quasi-bearish market, which is where we are currently, then that becomes really difficult because the people don't have a long-term belief in the network effects that you're able to build, right? And we saw this, by the way, in 2018 when we actually went really into the Web3 ecosystem. Bitcoin was like, at one point 3,000 or below, and Ethereum was like 100 below. People basically started to sort of have doubt in the long-term benefits of the network. And so they were trading them, but they were trading them for just sort of short-term effects because they couldn't see where it was going long-term, not just because of value, but because of the whole network effect embedded. Mm-hmm. So I think we should just, if we get better at understanding network effects, then I think we are able to sort of measure the value, the long-term value for these projects.
What role do you want Mocaverse to play in the crypto ecosystem and the broader mainstream adoption of all of this?
So the birth of Mocaverse really was to have a way in which our community can partake in the network effects that Animoca is building, but then also have a way in which the network of Animoca can be built and grown without essentially Animoca's direct intervention, right? So when you think of an investor like us, how do you participate in what we're building? In the past, it's like if you're another portfolio, right? And that's how the typical VC model might work. But here, that doesn't really make sense for us. And today, we've now created, a group of over 1.8 million users who have a Mocha ID, who actually add value to the networks that we are investing in as well. So they are, basically become customers or users in a Web3 way, which of course means that they spend more and they do more and they enhance the value of the network. So the role of Mocaverse users is essentially to grow network effects, right? And the platform and the portfolio gets to benefit as well because they get customers, they get users, they get experiences, they get beta testers. And of course, this is the other thing. They share that value with the end user directly, right? Which is, in Web 2, that's called advertising, right? But in Web 3, instead of paying Apple and Google all this value, you pay it directly to the end user. Exactly. So that's part of the mission. And then the Mocha ID is a reputation system that we believe, which is owned by the end user. It's a soulbound NFT where your actions can now be essentially stored permanently as a way of proof of what you've done in Web3 so that you can be appropriately targeted if you so wish. Right? So, for instance, I don't have to know your name, but I can tell whether you've whether you've been a gamer in 5 types of games, whether you basically hold tokens, whether you sell them right away, or whatever these patterns that you might be able to sort of determine. And then, over time, we think the better your reputation becomes, the more other parties, not just Animoca-related companies, will want you as a customer. And so this is actually how the real world works as well, right? If you're famous on the extreme side, or if you have a certain qualification,
or pay
you become
your credit card,
right?
Yeah,
exactly. People come to you and they say, "I want this from you," or maybe I want to hire you for something, or they'll come directly to you with benefits because your reputation is known. So imagine doing that at scale, where now hundreds of millions of people around the world have an online reputation layer that you can target directly with benefits for. That to me is essentially flipping the advertising industry, which is trillions of dollars today, upside down completely. And I think that is one of the greatest value unlocks, I think, in Web3, because so much of that advertising money basically goes to platforms that don't invest back in the ecosystems that actually have made them, right? So that comes down to sort of, I think the value of airdrops. One of the problems that airdrops had in the past, and to some extent still do, is that the way to earn them has become easy to bot, right? So civil attacks on them are actually very easy because you open a wallet or you do certain things, or maybe you just put in TVL and that's apparently enough, right? But you want to be able to sort of give value, not only that he's a real user, right? That's kind of where we are today, but also a real user that offers real value, right? And so I'm more likely to give it to someone who has proven over time that he is a valuable contributor. And this, I think, comes down to how we create reputation, use reputation as a way to create strong network and stronger network effects. If I can show that over years of a good reputation, I get more and more value, because that makes sense, right? If you have a good reputation, then I want you, I'll give you more, then it incentivizes and encourages everyone else to build a good reputation, right? It's how the real world works too, right? If you're a good journalist, if you're a good writer, if you're a good, programmer, engineer, over time, you're going to be protective about that reputation because that's actually a long-term investment. So I see Mocha ID and the Mocaverse as a way to help shift the perspectives of Web3 from this currently somewhat shorter-term narrative into long-term reputation narratives, where you start to really invest in the long term because of the benefits that will come to you or are already coming to you. And with Animoca, with over 540 portfolio companies, most of them have yet to launch a token. You can kind of already easily see what the value proposition would be on day one. And therefore, that we think provides a pretty strong foundation to give people long-term incentives. And then from that, encourage and build this better behavior that we think would be really helpful for Web3.
Mm-hmm. Speaking of reputation, what would be a word or phrase that you would want Animoca to be known for? There's a lot of products, pockets, areas within the whole brand, but looking long term, how would you want it to be described?
So, we've always looked at ourselves as a company that sort of propels digital property rights. And I think the same thing we often say is that, digital property rights, if you become actually really successful in this, then, they won't necessarily remember the name of the companies or the people involved in it. They'll just say, hey, I need to own my digital property and so on, right? Mm. And so the mission that I see of ourselves is that, we want everyone to have ownership, right? And we want everyone, and really the definition of this is we want everyone to have ownership of a piece of the future. And, we think Web3 is the future. Therefore, they should all have ownership in Web3. That's really what we want, I want to be known for having played a significant role in making this happen.
Amazing. I think that will definitely happen. To wrap things up, can you leave us with a piece of advice, maybe something you've carried with you throughout your time in this industry?
Well, I mean, there's a lot, right? But I would say, it's a never-ending journey. But I would say that for maybe all the builders that are out there, I keep telling people that if you are able to build something where you can build with a purpose greater than your own, then you will find that path and you will have conviction for this. And, we love to invest in founders that believe in that too, because they'll find ways, because the purpose is so important. Mm. And that is basically, you got to find that. And I think, that's, as a founder, I would try and encourage everyone that, if you could find that, then you'll find your purpose. Then you'll find more satisfaction in what you're building, and as a result, therefore, also more success.
Yeah, I agree with you 100%. Amazing. Yeah, thank you so much for coming on today. It was an absolute pleasure.
Thank you for having me. It was a great pleasure to be on your show.